The domestic economic activity continues to expand at an accelerated pace, supported by fixed investment and improving global environment. The second advanced estimates placed the real GDP growth at 7.6% for 2023-24, the third successive year of 7% or higher growth. From the supply side, industrial activity led by manufacturing continued its momentum. The Purchasing Managers Index, that is PMI for manufacturing, displayed a sustained expansion in both February and March, touching a 16-year high in the month of March. Services sector exhibited broad-based buoyancy, with all sectors within the services sector registering strong growth. The PMI services remained above 60 during February and March, suggesting sustained healthy expansion. With rural demand catching up, consumption is expected to support economic growth in 2024-25. Urban consumption stayed buoyant, as evident from various indicators. Details are given in the footnote. The resilience in cement production, together with strong growth in steel consumption and production and import of capital goods, augur well for the investment cycle to gain further traction. The total flow of resources to the commercial sector from banks and other sources at rupees 31.2 lakh crore, I repeat, at rupees 31.2 lakh crore during 2023-24 is significantly higher than that of the previous year, which was 26.4 lakh crore. External demand improved in February, with exports registering double-digit expansion. Trade deficit, however, widened in February as imports also accelerated. Going forward, the outlook for agriculture and rural activity appears bright, with good Rabi wheat crop and improved prospects of Kharif crops due to expected normal southwest monsoon. Strengthening of rural demand, improving employment conditions and informal sector activity, moderating inflationary pressures, and sustained momentum in manufacturing and services sector should boost private consumption. The prospects of investment activity remain bright, owing to upturn in private capex cycle becoming steadily broad-based, persisting and robust government capital expenditure, healthy balance sheets of banks and corporates, rising capacity utilization, especially in the manufacturing sector, and strengthening business optimism as reflected in our surveys. Improving global growth and trade prospects, coupled with our rising integration in global supply chains, are expected to propel external demand for goods and services. The headwinds from protracted geopolitical tensions and increasing disruptions in trade routes, however, pose risks to the overall outlook. Taking all these factors into consideration, the real GDP growth for the current financial year 2024-25, which started on 1st April, the real GDP growth for 24-25 is projected at 7%, with Q1 at 7.1%, Q2 at 6.9%, and both Q3 and Q4 at 7% each. The risks are evenly balanced.
If you like the video, do like, comment, share and subscribe.